please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, let's get a handle on what's happening in the other Asian markets which have just opened. We're getting in early rates from both Hang Seng as well as Shanghai. Hang Seng's opened with a gain of about 200 points. Shanghai absolutely flat, so we'll keep an eye out on how that one pans out. The Nikkei maintaining its gains of close to around 0.75%. The Korean markets, of course, sitting with a higher gains, playing a catch-up. Remember, that index was shut yesterday. The SGX Nifty indicated a start of 30-35 points in the green when we started the show. That has been maintained. The SGX Nifty now indicates a start of close to around 40 points, around that 10,735 mark for our market. So we'll keep an eye out on that. But let's watch out for the sugar stocks. Yesterday, they fell off the high point of the day. Balrampur Chini, in fact, has entered the F&O ban. But there is finally some relief for the sugar sector. Whether that's enough or not is something we need to find out. This relief has been, the sector itself has been reeling under huge losses, and the cabinet has approved a bailout package of close to 7,000 crore rupees for the sugar mills who owe nearly 22,000 crore rupees to sugar farmers. My colleague Rituparna Bhuiyan caught up with the Food Secretary Ravi Kant and began by asking him about the allocation to create buffer stocks and also if this package is enough for the mills to clear their dues.
The carrying cost of the stock, which is total 30 lakh metric tons, the carrying cost plus the storage charges and insurance. So up to a cap interest charges up to 12% and 1.5% on storage and insurance charges. Government has approved that buffer stock for 1 year for this total quantity, which will be kind of allocated to different mills.
23,000 crore is the due. How much of that do you think could be addressed by this package which was announced? It's a comprehensive package.
No, I'll tell you. As the minister just rightly mentioned, that it is the responsibility of the sugar mills to clear the dues. They have got the cane from them and they are producing sugar, so it's their responsibility ultimately. But because of the constraints of the industry, because the prices are so low that they are not able to recover some places they are not able to recover the cane cost. So in that sense, the measures relating to minimum price and all, it adds value, and further, it also prevents further downslide of the prices in the market, because the prices has gone down as low as 25.60, 25.65 in some parts of Maharashtra, just about a fortnight back, before this news about the government's package came into picture. So prices have gone down, and they could further go down if these measures are not taken. So creating further aggravating the situation. So government is not clearly giving money directly. This money will just go against the cane dues. What we are trying to create the environment where the sugar mills are able to pay.
So the strategy is to ensure that sugar mills are in a more healthy state,
so that they pay. Ultimately, it is their responsibility to.
29 rupees will be enough, sir, because
it's a minimum price. As the minister said, it's a minimum price. It could be sold anything above that, depending on the quality, availability at any time. And then second, we have to look at the consumer also. So what we are trying to do is a minimum price. That's all.
All right, let's focus on some news coming in from Uttar Pradesh. Patanjali Group has now decided not to pull out of its mega food park project in Noida. Remember, this comes after Chief Minister Yogi Adityanath called Ramdev to convince him to not shift the project. Yesterday, Patanjali's MD Acharya Balakrishna had alleged that there was no cooperation from the state government, Uttar Pradesh state government that is, and the project was not given clearance, because of which they wanted to move it out. This 6,000 crore proposed food park is expected to provide 10,000 direct jobs. Food Processing Minister Harsimrat Kaur Badal also spoke on this matter. She said that both the state government and the central government have assured that Patanjali will get the clearances needed for the food park. Then we'll keep it with the consumer space. After this short break, we talk about Hindustan Unilever met with analysts. We tell you what the brokerages have to say.
Well, one stock in focus would be Hindustan Unilever. The company met with analysts yesterday, and Mangalam is here to tell us what they have to say.
Well, the analysts were fairly sanguine on the stock. Remember, it is at a record high as well. So they weren't expecting any sort of guidance or cost-cutting measures coming in. But what they were impressed by most is the management's growth growth trajectory going forward, because now the company said, CLSA for instance says that their key highlight of the meeting was management using advanced data analytics in demand forecasting to drive growth and to reduce costs. Other than that, they also launched their WIMI, or Winning in Many India projects, regionally. So they will launch regional products to help market share gains. On the back of that, CLSA has an outperform rating with a target of 1650 on the stock. Jefferies too, they say that they're convinced on the company's superior algorithm of delivering volume-led sales growth, and they maintain buy with a target price of 1680. Yes, the valuations are elevated. However, Jefferies says the company is best placed. So both of them saying in a sense that the company is best in class, and the future prospects of growth given technology look pretty exciting.
Okay, all right. So HUL will be in focus on account of that. But on that note, let's get in some more important opinion coming in from Sanjay Shah of Morgan Stanley on what he makes of the RBI rate hike and his outlook for the market.
The Reserve Bank of India hiking rates, obviously it's against the background of corporate performance improving and the economy definitely showing some signs of a pickup. So I think it's fair to say that after the strong run that we have had in the last few years, and obviously accelerated by the fact that the domestic flows have been strong, so also the overseas flows till at least the beginning of this year. With that as a background, I think we are going through a phase in the market where we need to consolidate and just wait out some time. So the longer term story for India remains really strong, but the near and now appears one should be a little bit cautious about it. The last 4 years, we've seen almost $75 billion of overseas money coming into India between equity and debt. Year to date, we've seen slightly over $4.5 billion of outflow. Year to date in emerging markets, equities have seen about $52 billion of inflows, but India has really not got much. So fair to say, and in some ways justifiably so, that the relative attraction of India as compared to other emerging markets in the short term has waned a little bit. Again, it doesn't take anything away from the long-term story, because there's been fabulous work done by the government and the economic growth is just picking up. But yes, there is some short-term, rather a period in which India has to go through some kind of a consolidation, and that's why we're not seeing more inflows come through.
Well, we have Manisha Gupta with us now to tell us what she's tracking in the commodity space. Manisha, you have crude, which you're looking at closely.
Well, yes, absolutely. It's trading at a 2-month lows, and the recent pressure on the back of increase in U.S. inventories, those have gained up by 2.1 million barrels in the previous week. Add to that the U.S. production continues to hit record highs, and the latest number that we have is 10.8 million barrels per day. So these are the factors pulling the prices down. And then, of course, there is a lot of noise on how the OPEC and the allies could increase supplies and take a decision on the 22nd June meeting. There is pressure, of course, coming in from U.S. as well. And many of the banks now also are reiterating the fact that this is perhaps what the OPEC could do. So that clearly seems to be taking the premium off the prices. But what is doing quite well really is the base metal prices. You have copper trading at a 5-month highs in the Shanghai markets right now. There, of course, is upheaval in mines in Chile, in India as well. We have seen supplies go down. So the prices have increased by 6% in last 2 weeks. The other metal that is doing very well is lead. We have seen the prices gain up by 18% in last 1 month or so. And the lead smelters in Henan province in China may be cutting production by more than 30%. This is in line with the environment, pollution control, etc. So very strong supply concerns coming in for these couple of metals, and that is the reason you have seen a constant gain here.
All right, Manisha, thanks a lot for that. Let's just focus back then to the equity markets. It's a Thursday. We'll keep an eye out on the derivatives space. But just for some perspective, remember, yesterday we had a near 100-point rally on the Nifty. The SGX Nifty is indicating a positive start. And as a result of that, we saw a reduction in the FII selling in cash market. So the FII selling in cash market actually reduced to about 81 crores. Yes, it was a sell nevertheless, but lower than expected or lower than what we've seen earlier. As a result of that, we saw some selling in index options. The FII sold about 1,600 crores in index options. And what did they sell out there? They sold index puts. That means that they are hoping for a support at the lower level. 10,600 put, that one was the one which saw most amount of selling. A premium of close to around 88 rupees out there indicates that 10,500 to 10,550 is a strong support region. As a result of that, the maximum open interest, which indicates a mark of support, has moved higher from 10,200 to 10,600. So that is something we'll watch out for. And when the markets see support at lower ends, there is case for the mid caps to move higher as well. But how much higher? Above 10,750 thereabouts, if the markets do go higher, remember there's a fair amount of shorts in the system to trigger further short covering as well, because the FI has sold about 8,000 calls, 5,300 short index futures, and remember they're still net short on index futures. The long exposure stands at 43%. A couple of stocks that I'll be watching out for, of course, before that is the Nifty Bank weekly options expiry. 26,500 call and the 26,000 put are more active. Watch out for Balrampur Chini and DHFL. Both of them are in the F&O ban.
Okay, Mangalam, thanks very much for that. Well, on to our Bullseye Corner then. Our contestants this week are Ruchit Jain, Ashish Kyal and Vishal Malkan, who are battling it out for the strongest portfolio. So let's listen in to their picks for today.
My first call today is a buy call in MCX with stop loss below 790 for target around 885. My second pick is a buy call in RBL Bank with stop loss below 509 for target of 533. My third pick is a buy call in Canara Bank with stop loss below 251.5 for target around 276. And my last call is a sell call in Apollo Hospitals with stop loss above 951 for target around 895.
First call for today on the buy side is going to be JSW Steel, and long positions can be created in this stock, keeping the stop loss of 328.90 and expecting a target of 365. Next stock on the buy side is going to be Astral Poly, and long positions can be created in Astral, keeping a stop loss of 999 for the target of 1108. Another stock on the buy side is going to be Indian Bank, and stop loss for Indian Bank has to be kept at 337.30 for the target of 374. And the final call is on the short side is Balrampur Chini, and one can short Balrampur Chini futures at CMP, keeping a stop loss of 69.20 on the upside and expecting a target of 62 on the downside.
Bank of India, buy with a stop of 92 for targets of 104. Marico, buy with a stop of 320 for targets of 350. Syndicate Bank, buy with a stop of 47 for targets of 52. And PNB, buy with a stop of 82 for targets of 95.
All right, so those were the picks of our Bullseye contestants. With that, we've run out of time on Power Breakfast. Keep it with CNBC TV 18. Bazaar Morning Call comes up next.